Tuesday, October 9th, 2:11 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Going to discuss the U.S. dollar and the Federal Reserve Central Bank. It's a big event this month of October. It's a big event. Discuss the Federal Reserve, also called the Central Bank, known as the Central Bank, but they have mandatory meetings. The next one, October 29th, they will be meeting, and it'll be public record. The meeting would be to vote on the interest rates between the financial institutions overnight. It's going to be either left unchanged or they'll change it. One or two things. They are still operating with the federal government shut down. So October 29th, right now, speculators are anticipating 94.6% Federal Reserve for lower rates. Again, currently we're in the range here. And again, 94.6% anticipate they're going to lower it by a quarter. This could change between now and then. Wednesday, October 29th. The last one this year will be 10 December. Again, Wednesday, 10 December. And the speculators is 81.7%. They will lower it. That's part of it. U.S. Treasury Department for this month of October. U.S. Treasury Department sells fixed income products to pay the U.S. debt. The U.S. government spends more money than they collect in taxes. They offer different durations on these fixed income products. So this would be updated later today, but right now, the most current was yesterday. So the 1 month U.S. Treasury, your yield is 4.20. 6 month, yesterday was 3.82. Now let's go to the 1 year right here. The 1 year, 3.66. Longer term now, the 5 year, 3.72. And the 10 year, which is really correlated more to the mortgages, 4.13. And the longer term, 30 year, 4.72. Yeah, different yields, different durations. Fixed income products, the most safest financial assets worldwide, fixed income to date, U.S. Treasuries. You also have states, counties, and cities, and corporations that also offer these products. This market is huge. The bond market is bigger than the stock market. The bond market is bigger than the currency market. There's more paper out there. Let's go on to the next. I've already told you, U.S. government, Congress spends more money than they take in, so we have a debt. U.S. government is only paying the interest rate on that debt. Here's the current debt. It's above 37 trillion. Yeah. Back on August 13th or August 18th. I believe it was August 18th. Yeah, I think it was August 18th. We had just reached a high of $37 trillion. That's not that far back, August 18th. Either way, August 18th or August 13th. Not that far back. Since that date when we hit that all-time high of 37 trillion, we're almost at 38 trillion. Yep, we added another $889 billion Do the math. How many calendar days, let's just say from August 13th from now, have we nearly raised another $1 trillion in debt and just paying the interest? Again, federal agencies happen to reduce staff, cutting down labor costs, and other agencies practically gutted, have no operation capital. So we're raising money still to pay for other expenses. Plus, you're paying out of your income towards Social Security. Bankruptcies year to date. This federal agency, 4 times a year, public record, they release the update. So right now, because we're in the fourth quarter of the year, later this month, they're updated. But as of the past quarter, businesses, bankruptcy has increased. Look at that, prior to all these past years. Non-businesses has also increased the past 5 years. For a total, yeah, the year's not over yet, way above. That's not good. That's not a healthy economy. It may not be impacting you directly. Things get worse, more likely impact you directly. Well, I want to go over this. The US dollar index, past 10 years, each candle's a month there. Here's the high of the year. Here's the low of the year, these horizontal lines, very close to the low of the year. What has happened is this big green candle, that happened to be the low here and the high here, it overlapped that red candle. That's a bullish engulfing candle. That's strong dollar in that month. And then we did reverse, went down. Well, this month, which is not over yet, it's green, higher high, higher low. See how this closes out. But this is a key level right here. Right there, that high, that red candle. It's referred to as swing points. That key level, I'm watching for it to be tested, to see if we break above it or reverse. I'll explain more momentarily on that logic. So here we are, again, 5-year chart. Each candle's a week. Last week, inside candle. This week, huge move up. Again, U.S. government shut down. U.S. debt, all-time high. And the Federal Reserve meeting I showed you. Again, we could have just short-term price action and then reversal before, during, and after that Fed event or after Congress reopens. This swing point is a key level, this blue horizontal line. Massive consolidation since most of June. One-year chart. This was a swing point here. We broke it yesterday. We had minor rejection. But today, we broke above that candle that broke it. And today, we're testing this swing point. So the current momentum's up. The US dollar index, commodities are priced in US dollar. Foreign investments that come into the United States, purchasing real estate, purchasing materials, services, convert their currency into US dollar. Often, you have an inverse effect with yields. If the central bank, US central bank, lowers the yields, that typically weakens the dollar. I just showed you on that website the anticipation of the Federal Reserve. Let's go back to October. So again, if they lower rates, there's a higher probability the US dollar will decline. Commodities, again, are priced in US dollar. We might have a lot of volatility coming into the situation soon. Time will tell. That volatility be good for some people and others horrible. And that would affect many financial assets, not just commodities, the stock market too. So there's a situation building up here. And it's from several key events occurring and coming into occurring. There are trading opportunities in currencies in the financial markets. Thank you as always spending just a little time with me. That's it for the video. Thank you for watching.